Hello, this is Matt on the Moon Family Said Dan channel. XRP is thriving in rather unprecedented times, despite being in this precarious position from a legal perspective, thanks to the SEC v. Ripple case, which should be concluding sooner than later. Knock on wood, I suppose. Despite that, despite banks blowing up figuratively, and all of the chaos that's been ensuing, thanks to parts of legacy finance and positions created thanks to the federal government. Despite all this, XRP is still hanging on. It's number 6 in market cap, and I want to share with you some things in this video that just reaffirms my confidence in holding certainly XRP, but also crypto in general. So, look, what happened today, and many of you probably heard by now, there was a 25 basis point increase in interest rates. The Fed did go through with that, so you had yet another rate hike here. It's just it's completely contrary to this position. What they're doing with the banks is completely contrary to the position of trying to, tamp down inflation. Because if banks continue to fall apart, and I highlighted this in a video yesterday, so I don't want to regurgitate all of what I covered yesterday, but there's all sorts of regional banks, and you can see stocks are plummeting. There's absolute fear in markets. And if there are additional bailouts necessary, what does that mean for the federal balance sheet? Because if that increases, you know what that does. That's not going to be good when it comes to tamping down inflation. So it's like behaviors that increase inflation over here, but then over there, behavior that should decrease over time inflation. The government's doing both. How stupid do you have to be? But it's just they're in this position where it's like a rock and a hard place, because if they don't ensure that there's confidence in banks, you don't even have a country anymore. Can you imagine the fallout if the Fed actually wasn't going to take care of all these disastrous situations that banks are in? And this is what happens, though, when you have a system known as fractional reserve banking. It's a fractional reserve banking system. So it is what it is. So that's why I blame the government first before anything else. But this is also why I'm thrilled to have cryptos. I hold about 30 different cryptocurrencies, and this is historically unprecedented. So, a lot of people now speculating, as I'll get into a little bit later in the video, that, if things really end up getting lit on fire here from a monetary perspective, and things really start spiraling out of control, who knows what happens with the dollar, this would be some sort of catalyst, the theory is, for crypto and Bitcoin, XRP, everything basically just to go up. Now, out of fear of things crumbling, it is one of the reasons I hold this, but I admit there's not sufficient historic precedent to know exactly what would happen. Crypto hasn't really been tested ever in an environment such as this. But I'm just thinking, even if crypto goes down because it's viewed as a risk-on asset, even if it does, if there's some sort of wild card incident that causes everything to start going down in flames, even if that happens, markets always find a bottom. And so if there isn't sufficient recovery for the dollar or various sectors when it comes to the economy, okay, but crypto ain't going to go away. And I could see potentially, even though I do believe in that being the case, I could see potentially in the short term, if there were a truly wild card incident where things just start cratering on down, even if that happens, that would be because it's in particular, it has something to do with the United States dollar. Well, and I'm not that I'm predicting this. I'm just thinking out loud here because I've been thinking about this quite a bit. I'm sure many of you have as well, just conceptually, what happens. Well, if that happens, that's because the dollar is the global reserve currency. But that can only happen once for the dollar, right? So if that happens, well, I'll sure as hell be happy after that, after the markets find a bottom. Thankful that I have something that cannot be debased by any government agency because it's decentralized. In the case of XRP, it's deflationary. So there are a lot of reasons that I feel that way. But before sharing additional thoughts on this, I just do want to be clear. I do not have a financial background of any kind. I'm not offering financial advice, and you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. Damn it. If you don't like it, well, you can just get out. As I record this, XRP's at 46 cents. Bitcoin just a hair over $29,000. Market cap for the asset class 1.2 trillion, and Bitcoin dominance at 46.43%. You've got the crypto fear and greed index at 64 out of 100. So market participants are in greed. Now, there's this perspective shared by chart analyst Rakesh Upadhyay, who writes for Cointelegraph, And he did write this before we got the news about the rate hike, the increase of 0.25%. And I just want to share just a little bit of what he wrote. As far as XRP is concerned, he actually acknowledges that if we do see a bit of a move to the downside, at least in the short term for crypto, XRP could end back up in the the 30-something cent range, especially if we get as low as 43 cents. That's some sort of particular level he's watching for, where it could cause a cascading effect on down into the 30-something cent region. That seems to be somewhat in line with some stuff that I've heard from the blockchain backer and some others. So it's not a guarantee that's going to happen, because when it comes to technical analysis, of course, as you well know, I'm sure, it's about probabilities, not actual, generally speaking, not price predictions. It's about probability of potential outcomes. And this is something that could happen. But even if that's the case, I mean, we've had a hell of a positive year for crypto despite all of the craziness. And again, I still firmly believe that unless a wildcard event happens, we saw the bottom for crypto markets in November of last year. But part of what Rakesh Upadhyay also wrote here was the following. In an exclusive interview with Cointelegraph, Arthur Hayes, the co-founder and former CEO of crypto derivatives exchange BitMEX, cautioned investors that investing in assets outside of the traditional financial system is the only way out if they want to preserve their capital. Okay, well, I just want to, because there's no shortage of people that are sharing that perspective, and I'm not saying necessarily that it's completely wrong. I'm just saying, like I said at the just a couple minutes ago, there isn't historical precedent to know that that's the most probable thing. This is just, it's definitely speculation. It really just is. And it seems to make, to some degree, logical sense, but that's also why I wanted to just be clear from my perspective is, it depends on what disaster is bringing everything else down. If you're talking about something with the dollar, or maybe it wouldn't be the dollar. Maybe it's just, maybe the dollar somehow sticks around, but we still have some crazy banking collapse. Well, again, if it's something to do with the United States, given that the dollar is, it's the United States in charge of the dollar, the United States dollar, and it's the global reserve, that's the reason what happens in the United States matters everywhere else on the planet. That's it. So if you have that disaster, and if the dollar's over, and again, I'm not predicting that, I'm just thinking out loud here because people are talking along these lines, I still think that crypto would ultimately find a floor and bounce back. Now, with the dollar, would it continue to be the global reserve? What would actually happen at that point? And so this idea, though, again, of if you want to preserve your capital, better be stuff outside the United States. Well, okay, if you say that, though, then you are talking about end of days from an economic perspective from the United States. It's kind of hard to believe something like that's going to happen in the short term. I understand that the people in charge are absolute numbskulls, but I'm just saying that I'm not convinced of that. There are a lot of people who are quite famous in the world of finance and crypto who feel very strongly about that. I don't feel quite as strongly about that, even though I acknowledge I do hold that as a hedge just in case. I do like to have that just in case. That is one of the reasons that I'm holding crypto, including XRP specifically, which is deflationary. Now, here you had the headline from CNBC. Fed increases rates a quarter point and signals a potential end to hikes. The Federal Reserve on Wednesday approved its 10th interest rate increase in just a little over a year and dropped a tentative hint that the current tightening cycle is at an end. In a unanimous decision widely expected by markets, the central bank's Federal Open Market Committee raised its benchmark borrowing rate by 0.25 percentage points. The rate sets what banks charge each other for overnight lending, but feeds through to many consumer debt products such as mortgages, auto loans, and credit cards. The increase takes the Fed funds rate to a target range of 5% to 5.25%, the highest since August of 2007. Markets, though, are more focused on whether the Fed will pause here, particularly with lingering concerns over economic growth and a banking crisis that has rattled nerves on Wall Street. Stocks rose slightly, and Treasury yields were mostly lower immediately following the Fed news, but stocks struggled to hold on to the gains. So, moving on with this a little bit further, I'm actually going to share with you a few things from Attorney John Deaton, and typically when I'm sharing stuff from him, it's on the topic of something legal, but I thought he made some really good points and shared some interesting stuff specifically having to do with the state of things from a monetary perspective. And some of the stuff is just ridiculous, but he's spot on with this. And so he shared a tweet from Chris Hayes, who was with MSNBC. Chris Hayes wrote, I'm catastrophizing a bit. I still believe a soft landing is possible, but Fed seems intent on not taking yes for an answer. You know, I see something like that, and I'm like, what, could you tell me what you mean by soft landing, damn it? Like, because to this point, we've had multiple banks collapse. In fact, we just had the second largest bank collapse in United States history, and you're still talking about, oh yeah, it's a soft landing. What? How? Tell me, son, how are you defining soft landing? Because I'm just not seeing that. Attorney John Deaton retweeted that, and he said, I don't see this soft landing that people keep talking about. The Fed will raise rates again, and more regional banks will fail. Biden has no idea what's going on, but will say, our banking system is healthy and strong. If so, why isn't Buffett buying the banks? Because it's a mess. Yeah, so look, when you hear the government saying, our banking system is healthy and strong, you're welcome to believe whatever you want. But I'm just looking at the actual state of things, and I don't remain convinced. I do not. And then there was also this, Balaji shared this tweet to his 910,000 followers on Twitter, and it was a clip from 2011 showing former Federal Reserve Chair Alan Greenspan. And there's a quote from this video clip, and Greenspan said, the United States can pay any debt it has because we can always print money to do that. So there is zero probability of default. Face palm. And of course you're getting at the, the impending debt limit, which is just something that never stops. Because, the government continues to just spend outrageously, never controls itself, just basically, hey, let's just open up a new credit card and spend it into oblivion. Can you imagine doing that in your own personal life, though? So that's what the government's doing. And it's not a problem, Greenspan said back in 2011, because you can just print more money. Now, how could that ever go wrong? How could it ever go wrong, paying all the interest on that money? How could that possibly? It just rack up all the debt you want, never going to be consequences, right? And so you see stuff like this, and granted, that was from 2011, but I look at stuff like that because that's the mindset of today in 2023, and I'm thinking, yeah, I'm glad I hold some crypto. I'm pretty damn glad I hold some crypto, especially XRP. And so Attorney Deaton retweeted that, and he wrote, and this is interesting, it'll just paint a picture of how horrific things have. And I'll just assume, because I didn't double check this, but this sounds about right, and I trust John Deaton's numbers would be accurate. But he says, historical perspective of money printing. COVID costs equals $5.2 trillion. Now check this out, though, because that was $5.2 trillion for the pandemic era. World War II costs $4.7 trillion in today's money. So that's adjusting for inflation. It's still less money was spent on World War II than all the pandemic era stuff. That is wild. That is wild when you frame it like that. And then he writes, since COVID, total money printing equals 13 trillion. 5.2 trillion for COVID, plus 4.5 trillion for quantitative easing, plus 3 trillion for infrastructure. In its first 200 years, the U.S. printed $1 trillion. And again, all adjusted for inflation. So first 200 years, $1 trillion. And then since the pandemic era, 13 trillion. So again, when you hear someone like Greenspan back then say it, it's the same stuff that's being parroted today. Oh yeah, we're not going to default. You can always just print more dollars. Where does it end though? Because the debt ceiling is a fake ceiling. It's a fake ass ceiling. Can we be real about that? It's not a real ceiling if every time you hit it, the state of the current monetary situation plays no role in whether or not it goes up. If it just goes up every time, then it doesn't freaking matter. It's a facade, folks. It's stupid. And so we're at another position here. We're at an impending debt ceiling. And again, it can't go on forever. It won't go on forever. And then Attorney Deaton also shared this article for Business Insider titled "Bitcoin Could Jump Nearly 70% if the U.S. Defaults." Standard Chartered. And so this is like a full circle thing. This is what I kind of started the video talking about. Okay. XRP, yes, absolutely performing well in unprecedented times, unquestionably. Happy to see where crypto is today in 2023, all things considered. And it goes back to this question of what's going to happen if things get worse and worse and worse. Is that actually good for crypto? And again, I don't pretend to know for sure. I'm not. That's why I'm just being completely open and honest, intellectually honest. I don't know for sure, but that's part of the reason that I want to have the exposure, because my gut's telling me, well, there's no, there's no historical precedent that would make me think for sure this would be the case, but it does make logical sense to me. So that's why I'm, to some degree, kind of in the middle. I feel a little torn on that. And then just understanding that, because I'll tell you this, if anything, historically, you look at how, the decisions from the federal government and the economic state of things, just from the United States, how that has impacted crypto on a global scale. Because there's a very clear connection there. And then what now? Things get worse, and this is for the first time. It's good for crypto? Well, maybe, but do you see why I'm skeptical? But also why I want to hold it just in case, because I don't know for sure. That's what I'm getting at here. And so Attorney Deaton wrote, although I own Bitcoin, I do not want to see the United States not be able to pay its debts and obligations. Yeah, and sure, we'd all agree with that concept, sure, certainly, right? And so here you go, Markets Insider. With the looming debt crisis, ceiling crisis, showing no signs of a resolution, both bond and equity markets have become jittery. But while some investors are fearful of a historic default, one asset could potentially rise through a situation. Bitcoin. So let's kind of pause there. Not just Bitcoin. The entire crypto asset class moves in tandem. And sure as hell XRP, which is deflationary and doesn't have any sort of central authority. Yeah, I'll tell you what, if this is good for Bitcoin, I'd hazard a guess it's going to be even better for XRP. Just my opinion. Piece continues. Describing a U.S. default as a low probability, high impact event, Jeff Kendrick, head of FX research at Standard Chartered, said it may cause the Bitcoin to jump by about $20,000, representing an increase of 68,000. It's not 68%. My brain broke. Sorry, folks. Representing an increase of 68% from current levels. So again, and you guys just have to tell me, does that make sense? Is that what would happen when everybody's in fear? Bitcoin, which is historically viewed as a risk-on asset, it's just suddenly like, oh yeah, no risk here, and the price goes up and more people plow money into it for the first time in history like that. I mean, I'd love that. I hold Bitcoin. I'm pro Bitcoin. I've been holding it and XRP since 2017 and a bunch of other cryptos. Take a look at this now, also from the Daily Huddle. Crypto.com CEO Chris Marszalek warns to expect pain as U.S. banking crisis unfolds. According to Crypto.com co-founder and CEO, the banking crisis has underscored the importance of Bitcoin and blockchain technology. Quote, towards the end of last year, people were asking, what is the use case for crypto? What is this all about? This becomes very clear when your bank's out of business. There is value to the technological breakthrough that Bitcoin is, and it's easy to explain to people in the current environment. And that's one of the reasons why we're at roughly $30,000 in terms of Bitcoin price. People understand that this is an important technological breakthrough, end quote. Yeah, is that the reason we're at $30,000 though? Wasn't Bitcoin trending upwards before all of the banking catastrophe stuff? Yes. So, I mean, I agree with some of the stuff in here. It's not just about Bitcoin, though. I mean, when people say Bitcoin, it's like, just say crypto. Come on, just say crypto. Bitcoin is the least technologically advanced crypto out there. It's got first mover advantage. I'm still pro Bitcoin. I'm just acknowledging that it has severe technical limitations. And if you want to use it for anything other than store value, it needs a layer 2 that actually works. So no layer 2 for Bitcoin has been broadly adopted, though obviously you can use the XRP ledger with, like Spin the Bits is doing. So there's stuff out there. I get that. Kind of skeptical about Lightning Network at this point, in terms of long-term viability. Maybe it works out, but that's a whole different can of worms. But again, here's the idea that, it's pretty clear that, with all the banking trouble here, hey, you go to crypto, right? Is that true, though? Is this just a narrative that people in crypto tell themselves? And I'm somewhat skeptical of this. Now, I still think it makes sense to have this and be diversified, just, overall net worth, like a portfolio in general. But, and maybe it evolves to a point where asset class matures and people are like, yeah, duh, and then it does get treated in such a way. But is this that moment where for the first time it happens? I'd like that, actually. If we see some more catastrophic stuff happen, I'd like that, actually. It's not that I don't want that to be the case. So, but you see why I'm sharing this with you? It's like this seems to be just the the going wisdom within the world of crypto from all the people that are brilliant finance people. And I have no financial background. I'm just sharing with you my everyday Joe Schmo opinion here. But are they right? Because so many times people who are, the finance and economics people, like, how are they so consistently wrong about crucial things? And so I take what they say with a grain of salt. I don't think that all of them are actually brilliant. And so to see stuff like this that is outside of any sort of historic precedent, is this truly the moment? Because I've seen in narratives like this the whole time I've been in crypto, but this is the actual moment now. So I don't know. You tell me. All I can tell you right now is that I'm very happy to be holding XRP at this particular juncture in time, despite all the uncertainty. Looking forward to seeing the resolution in the SEC v. Ripple case. I'm optimistic. So I'll stop blabbering. You all tell me what you think in the comment section below. I'm not a financial advisor. You should not buy or sell anything because of anything I say or write. That would be a very, very, very bad idea. Until next time, to the Moon Family Sedan.